3 hours ago, something happened that most people still have no idea about. It did not trend on social media. It was not blasted across financial television. There was no breaking news banner flashing red at the bottom of your screen. But it may turn out to be one of the most important moments in the history of the silver market. The Vice President of the United States stood inside the State Department, looking directly at representatives from more than 50 nations, and said a sentence that quietly rewrote the rules of global commodities. Not a suggestion, not a theory, a declaration. The United States will establish reference prices for critical minerals, enforced through adjustable tariffs to protect pricing integrity. Those words were not accidental. They were not improvised. They were chosen carefully because they change everything. Silver is now officially a critical mineral, and the U.S. government just told the world it intends to make sure that metal never gets too cheap again. Think about what that means for a moment. The silver sitting in your safe, the silver in your IRA, the silver coins you bought years ago when people laughed and told you it was dead money. The government of the largest economy on earth just publicly stated that it wants that metal to cost more, not less. It did not say this behind closed doors. It did not leak it anonymously. It said it on camera in front of the world. This is not a rumor. This is not a screenshot from social media. This is not speculation. This happened today. By the end of this video, you will understand exactly what this announcement means for physical silver, what it means for paper silver, what it means for the largest short positions in the world, and whether the idea of triple-digit or even four-digit silver is fantasy or simply a question of time. But first, I need to show you why this announcement was not sudden at all. Because there is something deeply broken underneath the silver market, something so fragile that it is honestly shocking it has not already collapsed. For decades, silver has lived in a strange contradiction. It is one of the most essential industrial metals on Earth, yet it has been priced like it is expendable. Solar panels cannot function without it. Data centers cannot scale without it. Electric vehicles cannot be built at volume without it. Military systems cannot operate without it. And yet the market has treated silver as if it were abundant, replaceable, and endlessly available. That illusion is now breaking. Over the last 5 years alone, the world has consumed far more silver than it has produced. Not once, not twice. 5 consecutive years. The cumulative shortfall is staggering. Roughly 820 million ounces of silver have been used, consumed, destroyed, and never replaced. That is not a theoretical number. That is 10 months of every silver mine on Earth running at full capacity, simply gone. And here's the part almost nobody understands. More than 70% of silver is mined as a byproduct of other metals like copper and zinc. That means higher silver prices do not magically create more supply. There is no switch to flip. There is no emergency ramp up. You cannot just decide to mine more silver the way you can with gold. The supply is rigid. The demand is accelerating. The people in charge know it. Last year, quietly and with almost no public discussion, the United States Geological Survey did something it had never done before. It placed silver on the official critical minerals list. Not during World War II, not during the Cold War, not during any previous crisis in American history. Now, that single decision unlocked federal authority that had never applied to silver before. Fast-tracked permits, strategic stockpiling, defense prioritization, and yes, the legal framework for price intervention. This is why today's announcement matters so much. Because what the Vice President described was not a one-off policy, it was a system. If silver prices fall below a reference level, tariffs automatically activate. Not someday, not after debate. Automatically. The goal is to prevent any foreign producer from flooding the U.S. market with artificially cheap silver to crush domestic supply chains. In other words, a price floor, not enforced by subsidies, not enforced by bailouts, enforced by tariffs under existing national security authority. And here is where everything changes. The silver futures market only works because both sides believe they can win. Long investors believe prices will rise. Short sellers believe they can push prices lower, or at least avoid delivery long enough to roll their positions. But what happens when the government announces it will not allow the price to fall below a certain level? If you are short silver, your entire thesis collapses. Your upside becomes capped. Your downside becomes unlimited. The risk-reward profile becomes catastrophic. You are no longer trading against other investors. You are trading against the United States government. Right now, there are hundreds of paper claims for every ounce of physical silver that actually exists. Estimates vary, but the ratio is well over 300 to 1. That means for every real ounce of silver in a vault, hundreds of investors believe they own it on paper. That system survives only as long as most people never ask for delivery. But what happens when short sellers start running for the exits? There's not enough physical silver to satisfy a mass unwind. COMEX registered inventories have been bleeding for years. London inventories are down sharply. Asian stockpiles are near decade lows. The silver is not sitting in vaults. It has been turned into solar panels, electronics, and weapon systems. It has been destroyed in the literal sense of the word. And now the floor just moved under the market. At the same time this is happening, China has made its own move. Earlier this year, China imposed new restrictions on silver exports. Only a limited number of companies are now allowed to export refined silver. State media described the move as upgrading silver from a common commodity to a strategic resource. That language should sound familiar. It is the same language China used before restricting rare earth exports. China controls the majority of the world's refined silver supply, and it just tightened the valve. The United States responded by doing something far bigger than most people realize. It began assembling a trading bloc of allied nations, countries that mine silver, refine silver, and depend on stable access to it. According to the Interior Department, dozens of countries have already expressed interest. Think about who benefits from higher silver prices. Mexico, Peru, Australia, Chile. These are not adversaries. These are partners. And they are the world's largest silver producers. If those countries align under a U.S. led framework with tariff-enforced price floors, then the majority of the world's mined silver supply suddenly operates inside a protected pricing zone. Anything outside that zone faces barriers. This is not a trade dispute, this is a structural reordering of the silver market. And then there is Project Vault, barely covered, barely discussed. A $12 billion critical minerals stockpile assembled in weeks, not years. Funded through a combination of government backing and private capital. Oversubscribed, involving defense contractors, automakers, energy companies, and technology giants. Ask yourself why companies like Google are involved. Google does not mine metals. Google builds data centers. And modern AI infrastructure consumes enormous amounts of silver, far more than traditional computing. This is not speculation. This is supply security. Project Vault is not about profit. It is about survival. The manufacturers involved receive guaranteed access to physical metal at predetermined prices. Not market prices, set prices. That is a price floor embedded directly into the industrial system. And while the market debates whether silver is a bubble, the government is quietly locking up supply. Look at what silver has already done. From the low 30s to triple digits in a year. A brutal crash, a violent rebound, extreme volatility. That is not the behavior of a dying asset. That is the behavior of a stressed system trying to reprice itself under pressure. Is speculation part of the move? Of course. Leverage always amplifies motion, and anyone telling you silver cannot crash again is lying to you. But policy does not evaporate overnight. National security designations do not get reversed on a whim. Stockpiles do not get dismantled because of a bad trading day. The floor matters. Now let's talk about the number everyone is afraid to say out loud. $1,000 silver. Is it guaranteed? No. Is it imminent? No. Is it mathematically impossible? Absolutely not. If gold moves into the 5-figure range, something many institutions are now openly modeling, the historical relationship between gold and silver compresses dramatically. Even a conservative ratio implies silver far above today's levels. Adjusted for real inflation, silver's 1980 peak already places it well into the hundreds. And that calculation does not include something critical. For nearly 30 years, the US government has not publicly reported how much silver the military consumes. The largest silver user on Earth stopped disclosing its usage. That demand does not appear in official supply-demand models. It is invisible. Missiles, radar, satellites, naval systems, aerospace electronics, none of it is counted. Every ounce used is gone forever. The same government that classified that data is now telling you silver is critical to national security. Draw your own conclusions. This is not about hype. This is not about memes. This is not about quick riches. This is about a metal that sits at the intersection of energy, technology, and defense. A metal that cannot be substituted. A metal whose supply cannot respond quickly. A metal that governments are now openly fighting over. Bubbles do not get stockpiled by defense contractors. Bubbles do not receive tariff protection. Bubbles do not get classified. Silver is no longer just an investment. It is a strategic asset. And the question is no longer whether the world needs it. The question is whether the price fully reflects that reality yet. Because history shows that when policy, physics, and scarcity align, repricing is not gradual. It is violent. And it happens when most people are still arguing that nothing has changed. If you are listening carefully, you already know something has. And the world has only just begun to catch up.